Hi, this is Tony Sagami. Hey, there's been some pretty dramatic events happening across the Pacific Ocean in China, and it's affecting the currency markets, a lot of commodities, and your portfolio, as well as creating some opportunity. Here's what I'm talking about. The People's Bank of China, China's central bank, raised their key interest rates by 25 basis points earlier this week. The rate on their key one-year rate went up from 5.31 to 5.56. And the rate on one-year savings deposits went from 2.25 to 2.5. Now, this is the first rate increase in over 3 years. Now, this is important for a couple of reasons. Number one, it shows you how serious the Chinese central bank and the Chinese government is about keeping runaway speculation in real estate and inflation under control. You know, it's certainly the opposite of what we saw Bernanke and Greenspan do during our asset bubbles. So it's a very responsible way for a central bank to act, and that makes me more optimistic about the Chinese economy going forward. Number two, the reaction to this change was pretty dramatic in a lot of different areas. Most of the commodity-based countries like Canada and Australia saw their currency decline, as well as the price of most commodities. Everything ranges from cotton to gold to oil to copper, all dropped on the news because they were a little concerned that this may slow down Chinese demand. I don't think those are very realistic concerns. As a matter of fact, it shows how strong the economy is over there, and that's the reason they're raising their rates. And so this drop in all of these commodity prices is perhaps one of your opportunities to get back in before they start moving higher. I think this also tells you that the Chinese yuan still has a lot of upside left into it. And if you want to make money just on the currency speculation, there is a ETF that's a CYB. The ticker is CYB. That's the Wisdom Tree China Yuan Fund, and it is a direct bet on the direction of the Chinese yuan. If the yuan goes up, this ETF will make money. The ticker on that is CYB, and I think it's a fantastic vehicle to take advantage of that. Now, I have to tell you and disclose that my Asia Stock Alert subscribers already own it. We have a very fat gain on it, so I don't want to be, while I may be talking my own book, I really believe that the yuan is heading much higher. And the proof of this is the responsibility that we've seen at the People's Bank of China. Of course, you compare this to what's going on in the U.S., where we still have interest rates essentially at zero. They pledged another $500 billion, half $1 trillion in quantitative easing, and it's just more irresponsibility. Compare that to what's going on in China. The government in Thailand instituted a 15% tax on foreign purchases of fixed income investments. Brazil raised their tax from 4 to 6%. And so what you're seeing is a lot of other foreign governments are doing the exact type of behavior you want to see out of responsible central bankers and governments. Very opposite of what we're seeing in the United States, and that's a bad news going forward for the U.S., but very good news for those responsible Asian and Latin American countries. Until next week, this is Tony Sagami signing off.